Welcome to Real Vision Crypto. I'm Ash Bennington. Very pleased today to have with us Rob Frasca, co-founder and managing partner of Cosmo Adventures, to talk about the venture capital space and asset tokenization. Rob, welcome to Real Vision Crypto.
Oh, thanks for having me.
Well, it's a pleasure to have you here. We were talking a little bit off camera. You've had an incredible professional life, working as an operator in the tech industry, becoming a venture capitalist, and then ultimately getting involved in asset tokenization. Tell us a little bit about your background and how you got into the tech business to begin with.
Yeah, so actually I was the founder of the very first financial service on the internet back in 1993, 1994. I was at Carnegie Mellon getting my MBA, and I saw the internet emerge, my partner and I, and we started a company. We created the first stock quote server on the internet, the first company to put financial institutions online. In fact, I think we put over 100 financial institutions on the internet. And these are in the days when, it took an act of God to actually be able to get on the internet, if you think back 1993. And it was pretty exciting. So when I was about 29 years old, Intuit came in, Bill Campbell and Bill Harris and Scott Cook there at Intuit. They came in and acquired my company. And it wound up becoming Quicken Financial Network.
So this is really from the OG days. I remember when I was one of the young guys back in the late 90s, and it was difficult for financial services companies to do some of the things that you were talking about, 5-6 years later. So this was incredibly early in the space.
Yeah. And then I did another company with our CTO, Ken Lang, in the AI space, artificial intelligence space. And that company was acquired by Lycos. Now, when have you heard that name, Lycos, right? Most people, don't even remember Lycos.
Lycos was like the second largest search engine after Yahoo,
right behind Yahoo.
Time, right? Yeah.
That's right. And so we ultimately took Lycos public, and then that was acquired by Telefonica during the whole .com phase. And then I did another company, which was in the kind of software, SaaS software business. And that company was acquired by Nielsen. So I've been building companies now for, a little over almost 30 years. Let's say that.
So how did you make the pivot from operator, manager, entrepreneur into venture capital?
Well, when I saw blockchain emerge, I realized that, one of the things I say all the time is that I believe blockchain is the single largest value creation event in our lifetime, bigger than the internet itself. And a lot of times I talk to my partner, we talk all the time, my partners and I, we're all entrepreneurs. And I say, man, I've seen this movie before. I've lived this movie before, and I know how it's going to end. And I feel like what's going on now with blockchain is really what we saw happen with the internet in the 90s, which I was a part of, and quite frankly, the mobile kind of craze in 2008. Right. And so for us, having the experience of being an entrepreneur and having experience of kind of building companies, we thought, what better way to really enter this market in blockchain than as an investor? And so we created a fund to really focus on investing in early stage blockchain opportunities.
So tell us a little bit about Cosmo Adventures. What do you guys do? How are you structured?
Yeah, absolutely. So, when you think about blockchain, and what blockchain is really all about, it's really about kind of creating that trust layer, that decentralized trust layer on the internet, right? The early days of the internet were all about decentralization of content, decentralization of communication and of commerce. And now with blockchain, what it really is kind of that decentralization or peer-to-peer networking of trust. Think of it kind of like the internet of money. Yeah. And so when we saw that, we said, well, why not create a venture fund and tokenize the shares of the fund and allow people to buy into the fund by buying a token, a security token. And so our fund is the first evergreen, open-ended venture capital fund that is built on a blockchain. and allows investors to come in and essentially buy shares of that fund. When you think about the structure of venture capital, generally, it's a tough structure, right? It's a locked up fund. You're making investments. You're making capital calls. Usually it has a very high minimum investment. It's not very liquid. And only the big investors really get to, big institutional investors and family offices get to kind of enjoy the historical returns of venture capital. So what we did was we said, no, why not make it more accessible to people around the world by making it tokenized? So we have this fund, it is tokenized, and what we really structure on is giving investors early access and exposure to the blockchain market. A lot of the alpha of this market is very early on. And generally what we do is we invest in early stage pre-liquid companies and projects. And we do, and we give exposure to investors to that asset class.
So you're taking traditional venture equity stakes in addition to accumulating the tokens of these projects?
That's right. That's right. We invest in two things. One is the preferred equity, standard venture capital model. And the other is early stage, generally illiquid tokens. This model is, the blockchain model is a different world. It used to be, if you looked at the overall blockchain, overall company world, it was, 12 years to IPO. The average exit time across venture capital investments is around 5 years. Whereas here, what we're seeing is that these investments get liquid much, much faster because generally what they are is tokens, not equity. And so what we've tried to do is really look at the market and say, okay, we want to invest in either the equity or the early stage tokens.
Yeah, and some of the challenges, just more generally, that blockchain technology solves are precisely that: illiquidity, an absence of transparency, some of the very large hurdles in terms of minimum investment. This is really kind of a revolutionary time to be in the venture capital space.
That's right. That's right. And ultimately, what we believe is people want exposure to this asset class. They want to be part of it. And so what we're trying to do is really democratize this. Another thing we're seeing is, quite frankly, is that this is global. This is not just Silicon Valley. This isn't just Boston or New York. It's everywhere around the world. And, we see incredible amount of interest from an investor perspective worldwide. And more importantly, the actual entrepreneurs we're investing in are global. And so we felt that the tokenized structure is really an incredible structure to bring investors together into these opportunities.
So tell us a little bit about the universe of investable assets that you guys are looking at, what you find most interesting right now, and what you're most excited about in terms of the investments themselves.
Yeah. So what we did was we broke the market down into 6 various areas. And each one of these areas are then further broken down because it is so comprehensive, right? What we're talking about here is everything from the layer 1 protocols, the base level, the kind of the operating system of the world, to how you control governance in a networked world, which are kind of the DAOs, if you will, if you've heard that. And then the whole NFT side of the business is pretty exciting. And then the assets themselves, and then Web3, right? So you've got this kind of really just amazing market. And that's how we've really broken it down. One of the areas—
I'm fascinated by the token taxonomies, the way that we divide up the functional buckets, mostly because I've never heard 2 people do it the same twice.
It's hard.
It's really fascinating, and it gives you a sense of just how early we are when the basic classifications differ depending, on kind of like who you're talking to at the time. I think that's fascinating.
It is. It is entirely fascinating, and it's ever changing because it is so early, right? This is really the first inning of the game. And so what we're saying, we did a taxonomy a year ago. It didn't have NFTs on it. And now NFTs is a key part. Now, I personally can't stand the fact that we call them NFTs, because in my mind, what NFTs really represent are decentralized digital rights management. Now, you could argue, well, that's worse than calling it an NFT. What the hell does that mean, right? So, but if you really think about what's going on here. So, the old model, when I was a kid, we had ABC, NBC, CBS, and PBS. I used to watch Mr. Rogers on PBS. We had one local station. I grew up in Connecticut, out of New York. And we had a newspaper. And that was it. Okay. Right. And now we've got this world of decentralized content where everybody's a content creator. Yeah. Well, in the old model, the business model was pretty easy. Who got paid? Right? The content creator got paid, the distributor got paid, the movie theater got paid. It was pretty easy to figure out who got paid what to manage those kind of royalties. And in the new world, we've got the internet where everybody's a content creator. That business model gets blurred. It gets hard to figure out. So now all of a sudden, if we put blockchain in the middle of it, what it does is it allows us to really manage the royalties and the rights around the media in a distributed, seamless, instantaneous way. And so that's huge, right? Because what it does is it changes how everybody gets paid for content. And so as an investment thesis for us, how could you not want to, invest in the platforms, the plumbing, the systems that enable that, and transform the world.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.